Hi, this is Tom Sedlak, General Manager at 33rd Company Property Management. Thanks so much for listening to our video podcast. Today's topic is tips for keeping your Minneapolis, Minnesota HOA fund secure. And this actually involves all of your funds, your operating and your reserve funds. And how do you ensure that you have adequate protection for theft, for fraud, for accounting in those operating and reserve funds? And the first thing that most HOAs need to do is make sure that their actual bank accounts for their operating and their reserve funds are set up properly. Many times they go out and get a nominal commercial checking account or commercial savings account, but they're really not set up properly as custodial trust accounts as is required by Minnesota statute. So the first thing is to discuss with your banker what are these accounts and how are they set up, and are they in fact custodial trust accounts that support your nonprofit HOA. The other thing you can do when you talk to your banker, of course, is ask them if there is a positive pay service or positive pay system that's available for use. And basically what that means is that you can upload to your bank all of the processed checks that you have distributed to vendors, and then the bank knows what checks have actually been issued to vendors, and then if any check or check number comes up and is cashed that is not run through that system, then it's flagged for fraud. And that way the bank knows that, hey, this check came through and was processed, but it was not uploaded by you, so we're not sure that you actually wrote this check. So a positive pay system is certainly a wonderful feature that most banks will offer. And also, of course, adding a fraud protection or a fraud alert protection to your banking accounts would be another prudent thing to do as well. And sometimes that's included in an analyzed account or a client analyzed account that banks will offer. But make sure that you do have some fraud protection. That would include periodic checking. They set thresholds, and it is overseen by a banker, either electronically or manually. And they'll look to see occasionally if there is any evidence of fraud, or they'll set triggers that would indicate fraud would be happening based on the size of checks that are written, whether you have a limit of 5,000 or 10,000, and also the periodicity of checks, how many checks are going through per month. If that has a material uptick, then they would contact you and say that there's potential fraud in the account. So another good thing to talk to your banker about. With regard to the theft of money, you should ensure that your insurance agent who handles your master policy for your HOA also includes a Fidelity Bond. And a Fidelity Bond can be something that's a very small amount and doesn't cost much at all to have, maybe $50,000 or $100,000 or whatever is adequate for your association, but basically it covers any theft. Theft from a board member, theft from an individual member, theft from a prior management company, or even your agent, whether it's intentional or accidental. It covers the loss of funds from an account and broadly protects the association from a loss of funds. A good practice that your agent or your board can do if you're self-managed is to do a monthly reconciliation of your bank accounts and bounce them off of your actual software monthly statements. And any good management company that has some good software should be able to do this for you. And basically what they do is they print out the reconciliation statement from the accounting software, and they check off all of the checks that have been processed and those that haven't been processed. And the bottom line is that the balance of that software accounting statement should exactly match the bank statement. And that should be done on a monthly basis because that will give you the earliest indication of potential fraud. Another good practice is to allow your board of directors to have view access to your bank accounts. The board intimately knows what's going on in the association, and by giving them view access, you're not essentially opening the door for them to do transactions, but you are giving them the ability to check for themselves that monthly reconciliation with the bank, but also to look through the costs and expenditures and make sure that they are appropriate and accurate. And so that's another prudent thing to do. I know some management companies don't allow their board to view the actual bank accounts. I think that's probably not in their best interest. I think it's best to allow the board open access so they can see and help flag any fraudulent activity. So again, you're a team when you're working with your agent, and the boards and the agents, again, are incentivized both to mutually help each other to successfully manage for the benefit of the members. Another good practice is limiting the number of signatories. Quite frankly, if you have an agent that is managing and processing all of the checks on behalf of the board, there's really no need to have a lot of signatories on that bank account. In fact, you can limit it to the treasurer or the president and leave it at that. And then, of course, the agent that would be designated by contract would also be a authorized signatory by power of attorney, and then that limits the number of people that can actually sign authorized checks, and that helps the bank because the banks do check signatures. They do see that if there is a false or fraudulent signature, that they would reverse a check and then initiate a fraud claim. The last thing that would be a good practice is a lockbox. If you have owners that are paying by cash, that's a problem, especially for an agent that's trying to manage an agency format for a board of directors. You don't want to be handling a lot of cash. Typically, they're going to hand out a receipt to the member that drops cash off, but then they have a deposit problem. They've got this open cash that they need to get into the bank straight away so that there's no loss or theft of that cash. Better still would be to have either lockbox deposit capability or provide services like ACH or bill pay systems so there's no cash transactions involved on the day-to-day member payments coming into your association. So these are all good tips for keeping your HOA funds secure. I hope this helps. If you're looking for a good property management company that can help you with your homeowner association or your common interest community, please give 33rd Company a call. We'd be glad to help. Thanks so much.